Good morning, everyone, and welcome from Bird&Bird, HVS, AlixPartners, and EP Business in Hospitality to this, the 15th in our series of webinars focusing on the hotel and hospitality sectors. My name is Karen Freeb. I'm a partner in Bird&Bird's London office, and I head our international hotels and hospitality team. Today's webinar will focus on one of the most iconic and vibrant cities in the world, London. We will be looking at what the future holds for London and provide views on the shape of recovery and what should London hoteliers and investors be doing to take advantage of the recovery. Our programme will include two scene-setting presentations, one from London First and the second from EP Business in Hospitality. That will be followed by a panel session to discuss the key issues, and that will involve a number of leading players in the hotel space. During the webinar, please do remember to ask questions during the Q&A function on your screens, and we will end the webinar as promptly as possible at about 12 noon. To get us going today, I would like to ask you to answer 5 polling questions on this topic to warm us all up, which are now going to appear on the screen. I'm not going to read out all the possible answers for you, but I will read the questions. You'll be able to see all 5 questions by scrolling down the right-hand side and dragging down the blue bar. So the first of the questions is, when will London hotels' Revpar fully recover to 29 levels? Please could you tick one of the boxes now. Secondly, what will be the key feature of a successful London hotel post-pandemic? Just choose one, please, the one that you think is the most important from your point of view. Thirdly, what is the key challenge facing the London hotel market for international tourists? Fourthly, what is the key challenge facing the London hotel market for business travellers? Will that market ever be the same again? And fifthly, when will London hotel occupancy rates start to overtake those of UK regional hotels again? So if you could complete your polling there, and then we will put the answers that you've given us up on screen. So, when will London hotels' Revpar fully recover? We think it'll be 2023. That's certainly more encouraging than 2024, although rather depressing. We will never see a full recovery. The key feature of a successful London hotel post-pandemic, this is very interesting. You feel that it will be a hybrid space offering workspaces, food and beverage, etc., as well as rooms. That's definitely a talking point. Thirdly, what is the key challenge facing the international tourist market? And you have said there that you believe there are perceived COVID-related issues there that would impact on the return of the international tourist to London. What is the key challenge facing the London hotel market for business travellers? You've said the availability of Zoom, etc., means that we no longer need to travel to have effective meetings. And last of all, when will London hotel occupancy rates start to overtake those of UK regional hotels again? And the overwhelming feeling is that will be during 2023. Thank you very much for that. That's certainly provided with some food for thought to kick off our session today. And without further ado, I would like to now introduce you to Muniya Barua, who's the Managing Director of Policy and Strategy at London First. Muniya is responsible for London First's thought leadership and member engagement. So Muniya, we're very much looking forward, and I'll hand over to you now to give us your perspectives on this topic.
Thanks very much, Helen. And good morning, everyone. For those of you that don't know London First, we're a business campaign organisation which campaigns to keep London as the best city in the world to do business. And we do that working with and for the whole of the UK as the nation's capital. Now, it's a truism to say that COVID has had a profound impact on the city. Last year, before the Omicron wave, we produced some analysis which set out the social and economic impact of the pandemic on the capital. And what we found was that London's Central Activity Zone, the CAZ, saw a much higher drop in footfall relative to other UK and global cities. And that was down to the much lower numbers of people living in the heart of the city and our greater reliance on visitors, including tourists and workers. Around half of West End trade is from overseas tourists and 40% from office workers, to give you a sense of the impact. And according to City Hall, consumer spending in central London by overseas tourists was 7.4 billion lower throughout 2020. Domestic tourists spent 3.5 billion less and commuters nearly 2 billion less than 2019. The pandemic also pushed the unemployment rate in London to the highest in the UK. It was around 7%, and it's still tracking around 2% higher than the national average. And that's had a disproportionate impact on Black and ethnic minority groups and younger people. And perhaps that's not surprising when you consider that London had the highest numbers of workers furloughed in the country, and accommodation and food services were the hardest hit behind construction. And finally, more Londoners rely on public transport to get around the city compared to other UK cities, and the capital's transport network, up until the pandemic, was getting by without any subsidies until the recent bailouts we've just seen, but that has meant a over-reliance on fares to sustain the network. And around 70% of transport for London's revenue comes from fares, compared with over a third for New York and Paris. So that meant the fall in passenger traffic when COVID was at its peak, it was around 95%, had a much bigger impact compared to other global cities. Which means another legacy of the pandemic for London is the black hole it's left in the funding of public transport. And then, just as we'd hoped we were getting the capital back on its feet, with numbers of people coming back into workplaces increasing, restrictions on international travel easing, London's recovery was dealt a cruel blow by the arrival of Omicron just in the run up to the busiest trading period of the year. And if you'd been in central London in the days and weeks before Plan B was introduced with the Christmas lights, it was getting noticeably harder to get restaurant bookings. There was a real buzz. And we were certainly starting to see that feed through in tube numbers, which were regularly getting up to around 3/4 of pre-pandemic levels. Though interestingly, at weekends, weekend travel got close to pre-pandemic levels, suggesting people were happy to come in for leisure, but work not so much. But Omicron came and pushed footfall in the West End in the week before Christmas down by more than 30% compared to 2019. And tube journeys during that period were hovering under sort of 50% of normal usage. And the advent of tougher travel restrictions meant that around 600,000 passengers cancelled plans to fly from Heathrow in December. But now, with government lifting work from home guidance in January, the health picture is brightening thanks to the booster programme. Confidence is growing that the worst is behind us. And certainly anecdotally, we're seeing more signs from many of our members that staff are ready to return to workplaces in greater numbers for at least a few days a week. And I think what we're seeing is the pendulum shifting from after lockdown 1, where there was a really strong message from the government that you should get back to the office, to lockdown 2, where it was a bit of a damp squib. We geared ourselves up for the return. The government lifted lockdown, but kept work from home guidance for a period. And now that pendulum sort of swinging somewhere in the middle, with firms trying to get a balance between giving staff flexibility with a bit more emphasis on face-to-face time for building a sense of team and the creativity and sort of serendipity that bringing people back together brings. But it's fair to say that there are as many firm level decisions on return to work as there are firms in London. And that means it's a mixed picture on office space. And from our experience, some firms are downsizing, they're reviewing leases, they're looking at co-working spaces or satellite offices. Others are reconfiguring existing space or even adding space to create a more compelling environment for staff. So we're seeing a much greater emphasis on well-being, greenery and collaborative zones alongside quiet areas. And encouragingly, the latest TfL figures are starting to show passenger numbers are ticking up. So weekday tube travel on Monday was around 55% of pre-pandemic levels. Footfall in the West End was up a bit on last week, but it's still lagging by around 40% of pre-pandemic levels. Interestingly, weekend tube travel is around 3/4 of pre-pandemic levels, suggesting that leisure and hospitality are bigger drivers on behaviour rather than a compelling urge to get back to our desks in the office. And the big missing part of the jigsaw is overseas visitors. And it's going to take a while for inbound tourism, we think, to recover. So what can be done to help London get its mojo back? Well, in the weeks and days since the first lockdown at London First, we've been working with partners across the city to try and get London back on its feet quickly. And we launched our Renew London campaign, which was focused on 3 key actions to accelerate the recovery: a well-funded campaign to bring people back, a properly funded transport system, and significant investment in skills and reskilling. So on the first, bringing people back, working patterns may have shifted to hybrid, but we shouldn't confuse the short-term focus on getting people into the office with what that means for longer term for the future of work. Because I think at this stage, we just don't know how profound these changes will be, whether hybrid sticks or whether we will end up drifting back to 4 or 5 days a week over time. I think what is true is that we need to give people reasons to come into London to enjoy all it has to offer. So we were very vocal in making the case for a PR blitz to sell the sizzle of London, which led to the mayor launching his Let's Do London marketing campaign. And to get people back into London, the capital must have a properly funded transport network. So we've been making the case for a long-term sustainable funding deal for transport for London, that's worthy of a national capital and a global city. International travel, I think, will be a tough nut to crack. Last year, one of our members, Heathrow, said that 19.4 million people travelled through the airport. That's less than 1/4 of its pre-pandemic numbers. And according to John Holland-Kay, its CEO, the aviation industry will only fully recover when all restrictions are lifted and there's no risk that they'll be reimposed at short notice. And GLA's economics tourism forecast is not predicting, it's predicting international travel won't return to pre-pandemic levels until at least 2025. So just last month, we at London First launched a coalition. We brought together a swathe of sectors with an interest in maintaining London's position as a global hub. And we were calling on the Prime Minister to reduce the costs and burdens of travel restrictions. And we were rewarded pretty quickly by the news that fully vaccinated travellers arriving into the UK will no longer have to test. We've had a simplified passenger locator form. We've got some good measures that are coming into force on Friday, but there's a lot more work to do here. So we've been working with one of our members, the New West End Company, to campaign for the restoration of tax-free shopping, as well as making the case to exempt 2 popular international centres, the West End and Knightsbridge, from Sunday trading restrictions. We've also been calling for a visa for families of international students. They can visit multiple times during their family members' study, and collective passports for school groups from overseas, particularly from the EU. But we need to think bigger. If you look at Hong Kong, their comparator marketing agency spent around 80 million last year alone, and that's around 57 million more than London's annual spend for promoting the capital. So if we were to raise London and Partners spending to Hong Kong's level for 3 years, that would have a dramatic impact on footfall and international travel. And this is really important because the majority of inbound tourists arrive in London before they head off to other parts of the UK. So what about business travel? I think the big unknown is how corporates will respond, but I have a prediction. Just as the mobile phone failed to kill face-to-face meetings or international travel, and notwithstanding cost, time and environmental concerns, I think international travel will be back. And that's because we all know that there are some things that just aren't as good on Zoom. Things like making deals, business development, onboarding staff. So we might see firms approach business travel differently, trying to pack more into itineraries, doing more routine meetings virtually, adopting things like carbon offsetting schemes to mitigate the impact of emissions caused by flying, but I think it will be back. So I'm going to end with a few reasons to be cheerful from some of our members. London City Airport was already seeing a strong return to business travel during the latter half of 2021 before Omicron struck. Its CEO is expecting that to pick up again in 2022. Business travel accounted for nearly half of all of City's passengers in October and November, back up to pre-COVID levels. It's just added 6 new flights aimed at holidaymakers. My next member is The Londoner, a new luxury and experiential hotel in the heart of Leicester Square. Super boutique, 16 stories, fabulous art collections. They're already seeing visitors from the US, France and Italy ticking up, and are hopeful that set pieces like the Jubilee and Olympic anniversary will get visitors excited. And finally, Excel London's forward bookings. Last year, they were only open for 5 months. They hosted 90 events. This year, they've got 300 events, 350 events actually lined up, from Comic-Con to London First Skills London Jobs and Careers Fair. And with the Elizabeth line opening soon and a big expansion programme, that's a really big boost for the capital, given events generated by Excel generate around 4.4 billion for London and support 35,000 jobs. So I'm optimistic about the future. I think there's no doubt London will bounce back, but the pace and scale of that recovery will very much depend on the actions that government takes to support the recovery. And despite all the talk that we've heard about levelling up and the implications for London, we should remember that London generates a 39 billion tax surplus, before the pandemic for the Treasury. So London's recovery matters for the capital, but it also matters for the whole of the UK too. And I'll stop there and hand back to you, Karen.
Thank you very much, Muniya. That's really great. And I particularly liked your very positive references there to your, Excel London City Airport and the Londoner. That's really very encouraging for us all. And also your prediction about business travel, because I think that's something that all corporates are worrying about at the moment, and thinking, are the ESG considerations in particular something that should overwhelm or take priority in our decisions about whether or not we send people around the world again for business purposes. I've got a question I'd like to ask you, which is, what specific actions do you think need to be taken by government to accelerate the recovery?
So I touched on a few of these from our recovery plan, and I think they still stand. And if the government adopts our plan around a big marketing push to sell the sizzle of London, funding TfL properly, because that is important not just for London but for tourists more generally, and invest in skills and reskilling programs, then that would generate 8 to 12 billion in additional tax receipts. And I think what is really important from our perspective is, at the moment there's a real disconnect between the capital and the rest of the country, and unfortunately that's being whipped up by politicians. So they need to start talking London up. Regional economies are interconnected through jobs, supply chains and people. So I think it would be really wonderful if we could hear a bit of pride in the capital, and take us back. It's the Olympics anniversary, the 10th anniversary. So take us back to that feeling of pride in the city, because the recovery is a real moment. It's a real inflection point for London and the UK. It's a chance to rethink how we use the city, how and where we work, how we accelerate the transition to net zero, and how we become a more inclusive and fairer place. So those would be my asks of the government.
Great, thank you very much. In the interest of keeping things moving and making sure we leave plenty of time for the panel, I won't ask any more questions, but I see a couple have popped up. One about where spending goes. Are we spending too much on cycling lanes and that sort of thing? But maybe those are something that we can pick up later. So thank you very much, Muniya. That's great. So I'd like to now introduce Chris Shepherdson, who is the founder of EP Business in Hospitality and Reinvention, which I think might be something that Chris is going to focus on in his talk today. And EP champions hospitality business and people. So Chris, over to you. Thank you.
That's very kind, Karen. Thanks very much indeed. And Muniya, that's great. Really interesting. I'm just going to, again, talk about 10 minutes and go through some stats about how we view the return of London, the recovery of London. And actually, I do think there's an exciting picture coming together, but it is one that's going to be very different. Let me just make sure I share this, okay? Can everyone see that?
You can see it just needs to go into the other view.
Yes, I know, I just can't quite get to that bit, sadly. Cool.
It's just in slideshow.
I know, the top column's just not deciding to go away for me to reach it. That's the problem. Anyway, let me just move on with this so we can carry on in the meantime. Will London, I think the question is about, will London reinvent itself? And I think the argument I want to put forward over the next few minutes is how London will reinvent itself. Because I think it's going to be a really interesting picture to emerge. London's gross value added shrank 3.6 between 2019 and 2021, whilst the UK and the regions obviously didn't fall as much. However, London, we know, is forecast to come back strongly. However, I think the really interesting and the piece which is going to impact on London is about business travel. Now, last year it stood at around 40% of 2019 levels. And I think this year, as I understand it, it's actually forecast to grow to about 60%. But it isn't going to come back to the 2019 levels until 24, 25, as Muniya mentioned. And that's going to be still a long time of recovery when you think that business travel and international travel equates to about 40% to 50% of spend in the major hospitality units. So that's still another 2 to 3 years of recovery for that to happen. At the same time, density numbers in London are bound to fall. Now, whether numbers are coming back, and we'll talk a bit about that, you're still going to see people only coming back to 2 to 3 days a week in offices, and that's naturally going to see less people commuting, operating and commuting into London. So the one thing we know about COVID-19, it has shaken cities to their core. For the first time, cities arguably have to reconnect with their audiences. I mean, historically, everyone's always gravitated towards cities because that's where wealth and prosperity was. Now, technology has empowered the commuter. The game's changed in a completely different way. People are enjoying better lifestyles. They're spending less in commuting. They're spending more time with their families. They feel more productive and less stressed. So the question is, how are cities going to respond to this? Because they're going to have to, and it's going to have to lead to that piece of reinvention. So there are 5 battlegrounds on the road to recovery. The employee and customer journey. I think the one thing we're all reading at the moment is about how the experience is going to become increasingly important. And actually how we create an experience, whether it's in the workplace or whether it's actually when you're coming to a destination, is going to have to slightly change and improve. The return of international business, as mentioned, that's going to be a long recovery, and we've got to see how that happens. And that, at the same time, to recover that density number that's missing, we're going to have to look at how do we win new audiences. And one of the interesting debates at the moment is actually, is it going to be younger people going to come to the cities? Because actually that's a natural piece. And is it at the same time people retiring? There's actually a lot of people retiring during this period of time who have still got a lot of wealth and are still very active. Will they come to the cities and want to live in cities in a different way? Sustainability is obviously a major piece and influencing everybody. How is that going to impact on how the city is going to change and the investment coming into cities? And digital, which I'll touch on a bit later. But digital is going to play a major role in the reinvention. So there are 4 scenarios in play at the moment that everyone believes in what's going to happen. One, everything's going to return to January 2020. And there are about 30% of operators who do believe there will be a return by mid-year to that kind of numbers. But it's a really interesting one. A booming city with business and hospitality arts at the core. And I think there's a strong argument for this. And actually, it's a great opportunity for hospitality because people will travel, and they are traveling into London, as Muniya mentioned, but they're traveling for hospitality and arts. The question is, can we get them to travel more consistently? In a city decline and redevelopment, it's an interesting piece here. There is a big argument for the need to invest more into living conditions within London and then in the development of the kind of regional villages around the city. Or a cautious rebuild with a society which changes. We're going to see much more diversity and inclusion. We're going to see greater change, but it's going to be a longer journey. Now, none of us actually know which of those 4 scenarios are yet going to play out, and that's the interesting debate. From research, 55 to 60% believe that their business will have fully recovered by mid-2023, and I think that kind of coincides a bit with the polling numbers, so you can see that there is a consistency there. 42% believe that creating better experiences will be essential to actually rebuilding successfully, because the experience is becoming a key piece. This is only 30% believe that London will return to 2019 level trends and levels. And part of that is belief that employers are now going to start demanding that employees come back to the office. Well, that may happen. But the one thing I know about the Brits, and we've seen in Brexit, that actually sometimes telling them what to do is never a great thing. So actually, will that happen? If it's going to happen, there's got to be a reason for it to happen. And actually, that's going to be about how employers and workplaces change, and how actually commuting and travel changes. And that's 2 places where there's going to need to be more investment, I suspect. And 62% believe that people will travel back into destinations and for arts and culture, but not work, which reflects Muniya's research a bit earlier, saying that's what they're seeing in TfL. But cities are bound to respond. I mean, the pandemic has accelerated a rethink of the high street. It's going to have to, because obviously that's going to be a difficult place. We're getting a lot of feedback that those businesses and hotels that are investing in services are seeing greater returns, and actually numbers are improving better and stronger than forecast, which is encouraging. So will service become a key differential? Now in the polling, I noticed the answer was no, but actually the facts are suggesting the opposite. So that could be an interesting piece. Cities will become stronger places for living, with greater investment coming into city travel. I think that's going to have to be a big area of focus. And offices are going to change the way the employees are engaged. There's a new confidence that is beginning to grow. That's been the good news about 2022. It is not all doom and gloom. It's just a period of transition and a period of change. London is one of the true global cities, and it's going to remain that. It's going to be unchallenged, that piece. It is going to return to strength. The real question is not how it's returned to strength, it's just how it will be different to how it was before. But the consumer, and this will be determined by the consumer. CGA did some research last year, and they noted that 65% of consumers want today to live in the moment, with the key factors they're selecting, including experiences, and this whole bit about experiential experience piece, exclusivity, and great food offers. Again, it's that piece. People are going to travel for great experiences and for hospitality and for the arts and culture. So that has to be central to the rebuild. Research also notes that consumers will buy from businesses that invest in acting sustainability. The sustainability piece has come forward over the last 2 years quite really strongly. And it's interesting that investors everywhere now are looking for that sustainability piece to be part of business plans. And how we now look to get to carbon net zero will be key in all business plans and how companies behave as well. Digital innovation is a really fascinating piece, but as we noted, the pandemic has been a catalyst to spark a 7-year increase in the rate that companies have adopted new digital offers. Now, pre-pandemic, everyone was saying that if we were running a 1,500-meter race, hospitality was probably lagging near the back and needed to catch up. So actually, the work that's been done over the last couple of years in this area has been impressive. And actually, there's a lot in all places. Digital is now a central discussion and central strategy. Now, the interesting piece is empower the employee and change that commuting piece and changing the mindset of how cities are going to have to think. But at the same time, it could also well be the answer as well. And it's estimated that this will see an increase, digital will see an increase of 13.4 billion UK GDP by 2025. And many believe that actually what we're going to see in London, it will become the market leader in innovation and technology startups and development. It'll be interesting whether that's the case, let's hope. So the rebuild is beginning to happen. We know the stats are there. Work cultures are already changing. Leaders have been engaging on what can they do differently, how can we actually correct some of the wrongs that were there before. Now, 70% of London-based office workers have already returned to the workplace for at least 1 to 2 days per week. And this number is set to increase to 85% by June. And I think the overall view is actually what we're going to be looking at is around 70% working for 3 days a week. That's what we're going to get to. during the course of the year, but that still leaves that 30% density 4, which is where the problem comes. And that's where new audiences will enter the market, and we'll see densities back to strength by 2023 and 2024. And there's a strong view that younger and older generations will be the two that fill that gap. So the questions that I think that everyone needs to think about are: how can cities become stronger destinations? How do we create that experience? How can offices improve their services? The employee today is the one holding the power. You can't just demand they come back. How can services offers be improved and improve experiences? And where is investment going to be needed? In digital, more in sustainability. So what's likely to change? Well, commuting needs to become a better experience. There's a good reason why people aren't coming back, let's be fair. And it's not just about the money. The commuting experience was always a stress. It needs to be safer, cleaner, and more customer focused. Investment to make city centres more attractive places to work and do business. We need to engage that international traveller, business person coming back again. More affordable housing to be developed closer to jobs. Greater commitment to eco-friendly practices and car-free zones. Car parks to be redeveloped to be centres of hospitality. There's a strong argument for that. Greater investment in parks and outside spaces. And offices to obviously improve. But all this gives an opportunity for hospitality. You can argue that hospitality has never had a better opportunity to be a really central role in cities. It's always played a central role, but it could even be more central. Consumers do want great experiences, and many destinations understand they've got to invest now in their F&B in order to attract audiences. It's fascinating to look how many sports stadiums all around the country understand they've got to improve their experiences in hospitality to make sure the numbers are coming back. And it's no different than city centres. There's interesting research is showing that international conferences and business events in the UK is estimated to be worth 19.4 billion in 2019, and by 2026 it's forecast to be worth 27.6 billion, which shows that the recovery is online and it's going to happen. It's just a matter of time and how long it's going to take and how we change. So our view is this could be an exciting era about to emerge. The question is, are we ready? Do we understand it? How are we going to change? Thank you very much indeed. Now, hi, Karen.
Thank you, Chris. Chris, before we move on to the panel, I think I'd just like to ask you one question, if that's okay. How concerned are we, or should we be, or from the people you've been listening to, have you been getting any feelings about this, about levelling up, which is very much the government's key, one of their key focus areas at the moment? Should we be concerned about levelling up, diverting spend from London, especially on the arts and culture?
Personally, I don't think so. But I understand the levelling up, say, political piece, and I understand why. I think we all understand why, and there is a genuine need for that to happen across the UK. However, London itself will always, I think, be the centre, and it will rebuild strongly and bring people back. And actually, I think the arts and culture piece will be central to that. Mm-hmm. So I think if the arts and culture piece and the hospitality piece can get, we get our acts and our services in the right place, that can be the centre of the rebuild. And that's why I think it's actually an encouraging picture that's coming together. But it is going to need new thinking, and it is going to need investment. There's no word about that.
That's great. Thanks, Chris. I'll leave it to you to move on to the next stage.
Thank you. Thanks, Karen. Thank you very much indeed. And may I now introduce Graham Smith, Managing Director of AlixPartners, to lead the panel. Good luck. It should be a fascinating discussion.
Thanks, Chris. Appreciate that. And just ask the various panel members to put their cameras on now so we can see them all. And so just by way of introduction, I'm Graham Smith. I head up the hospitality and leisure industry team at the global management consulting firm AlixPartners. So I spend a lot of my time advising hotel groups on M&A, finance raising and restructuring activity. We've got a great panel today and a really good mix actually of perspectives from boutique operators, branded operators, also from the world of data and technology, and from the world of valuation and consultancy as well. Joined on the panel by David Orr, CEO of Resident Hotels, Peter Anscombe, who's Senior Corporate Director at Edwardian Hotels, Michael Izzo, the CFO at Corinthia, Jan Teixeira, who's Head of International Hospitality Sales for Amadeus, Russell Kett, Chairman of the London office of HVS, and also Carrie Wicks, the founder of Chateau Denmark, really exciting new property opening up in London. So extend my thanks to the panel for joining today, and just like to kick off with the first question. This one to you, Michael, if I could. It'd just be great to get your views on your experience in terms of the demand patterns that you've experienced at Corinthia since reopening last year. You know, in terms of the level and sources of that demand, whether leisure, business, domestic, overseas. Just be great to get your perspectives on that to kick us off.
Thank you, Graham. So when we started to reopen the hotel was around April, May, when they started to lift restrictions. And we saw a great demand from the UK hospitality domestic market. I mean, this continued throughout the year mainly. And then as we got into the year, we started to see a pickup in corporate groups, in demand and pent up for weddings, for social events. In corporate groups, we started to see a lot of the entertainment industry coming back to us. And then as we got to December, Christmas and New Year's was looking excellent. and then obviously Plan B came into place. Restrictions started to go in place, and then it dampened the demand over Christmas, and that followed us through into January. I mean, if we look at 2021, though, it was a very strong year. So if we just take, say, from April to May, the rooms, we reached at least 55% of the levels of 2019. F&B was even stronger on the ground floor, coming up to 65%. And then amazingly in the spa, which we have a very large spa, which is almost like a small hotel itself, it got to 80% of the levels of 2019. So it was a very encouraging.
Right. Yeah, that's amazing. And is that continuing? Is that do you feel that kind of optimism as we head into 22?
January was a slow start, but week on week, day by day, you see the demand starting to come back in. You can see the entertainment groups, you can see corporate groups, you can see weddings rebooking again. So I think it's going to bounce back very quickly. Very quickly.
No, that's great. That's great to hear. It chimes with some of that optimism that we've been hearing about. And great to get David, if I could come to you, your perspective on this as well. Slightly, variance of locations across your group, but what did you see as we reopened through last year, and how does that look as we head into this year?
Thanks, Graham. I think I would echo really what Michael has said. We saw we were very lucky to have been building our new brand on a fantastic legacy, and with our kind of reputation very much as our focus, we felt that we were able to be in that sort of shop window to demand that was out there. So we felt it was going extremely well, and obviously Omicron was a significant damper. We kind of stumbled through December, actually ended up ending December virtually where we'd sort of started it, as it were. So it wasn't too bad. And January's been much better. I mean, across the group. I mean, clearly, as some people may know, I'm fortunate enough to operate in 4 micro markets in London, which are quite distinctive markets. So fabulous locations, which were very, very well sourced. And what we've been able to do in Soho in January, we were 80% occupancy, and that's reflective, I think, of a number of factors. But there is demand there, but the winds are very light, clearly in January, and in Q1 in any event they are light. So it's been a sort of a journey where I think also, like Michael's just said, we are seeing now forward bookings happening in a more, if you like, semi-normal pattern. There is international inbound expecting to be able to come in, and we're seeing that. But we're actually, in some respects, we're actually ahead of 2019 in terms of what's on the books. But I wouldn't misread that. I wouldn't overread into that.
Why do you say that, David? Why should it sounds like optimism? I'd love to overread into that.
Well, because I think I mean it's been an unusual time, and
yeah.
You know, the fact of the matter is that I don't know, but I surmise that some of the hotels that have got a different operating model have been struggling quite a lot through this period, and you know, sort of as everybody emerges, I'm sure everybody will form their own view as to revenue strategies into an emerging, improving situation. So I mean, I think that where we are feeling is in a fairly good place, but inevitably, when you're a relatively small footprint and business and you operate in micro markets, it's going to make a big difference as to how everybody gets on when the real markets properly open up. So I'm optimistic for us, but I'm also I'm concerned and hoping that I can be optimistic for everyone else.
Thanks, David. And Peter, great to get your perspective on this, particularly as you look into 2022 and as you've started the year. What is that sense of business travel, event-based demand as we're heading forward into 22? What are you experiencing at the moment at the Edwardian?
I think it's difficult to say anything at the moment is what you could describe as a pattern. And for us early on, it might have been complicated by the fact that we were consolidating demand through a more limited number of hotels as we sort of controlled the level of openings. As we've gone in and out of the different lockdowns, I mean, domestic leisure has throughout remained the strongest element, and parties like Booking.com have been the major source. And generally, it's always been the weekends that have stabilised first, and then it's taken a sort of 4 or 6 week period to stabilise the midweek. When we got through to September, October, November last year, we were getting closer to the 2019 numbers. But I think, and people may have different opinions on it, but as we got through to the sort of COP26 type meetings, it became quite clear in the market that there was an underlying tone that something was going to come relative to further lockdowns. So that anticipation and then the subsequent announcement of the lockdown in December, bookings fell off substantially, cancellations started coming through quickly. And you were probably around December looking at a position where booking per day reservations and cancellations were largely netting each other off. And that created about a 20% occupancy drop for us over that period on average across all the properties. We didn't close properties again over that period, so we're not sort of reopening as such. But the build-up this year has been much slower than it was seen in that sort of third, fourth quarter last year. So if we were looking at sort of weekend business, we would normally, looking 2 weeks out, we'd be looking at something that might be up to 95% occupancy in that period last year, whereas now we're looking at about 65%. So we're running about 30% behind that sort of third, fourth quarter. You might explain that by less pent-up demand, as much of that was, you know, the initial demand was satisfied last year. More hotels opening, more lifting of occupancy caps that various hotels had, so it can be a combination of all of them. We've had some pickup in international, but it's very minor. I know the comment was made earlier relative to our London property seeing some of that, but you know, the level that's coming through. So when the restrictions were lifted slightly on the US, UK travel, it largely was senior executives, people coming through, but we were seeing something that was about 5% US business, whereas our traditional model would show about 30% of that. We're seeing a little bit in terms of international tour groups, and some with longer length of stay. So again, into that comment that people are packing more into their journeys, but traveling less. some increase in some Southern European business, but relatively small, and some small sort of board meeting type meetings with an overnight stay, but not in terms of a level of growth that one can say, it's definitely there, or something that, it's definitely come back, or something that one can say is a definite pattern.
Okay, thanks, Peter. And we've heard a little bit there what people are experiencing on the ground. Yeah, and I wonder if I can come to you. You've got quite a privileged position at Amadeus, as seeing the data and the booking activity out there, maybe as a bit of a leading indicator. What does the data tell us about travel intent and search activity? Does this all point to still significant pent-up demand for travel to London?
Yeah, absolutely. So I'll cover a few things here. The previous panelists have spoken about some of their hotels and what's going on, but just let me give you a general picture. Let's talk about booking lead times, as in booking lead times into London, prior or during the spread of COVID, were about 40% was 0 to 7 days before, entry. Then it increased in January 2021 to 62% bookings made 0 to 7 days. We've seen improvement on that in January 2022. This year, it's back to about 48% is booking within 7 days. So if I do some comparison against the US markets, the US markets are now 58% within 0 to 7 days. Knowing that the situation, like Peter mentioned, is still pretty fluid, okay? And then talking around some of the booking channels, brand.com, direct and OTAs have done well during this period. Again, likely driven by more business, more leisure business travel. And then also travelers looking to confirm with properties direct. So because of the local protocols in place and then different services offered, what restaurants are open and closed, etc. We've seen an uptick in the brand.com. But as we move forward through some of these cycles of the markets reopening, we will find some of that normalization of that the channel mix coming into the hotels.
And yeah, and just overall, the behaviours there in terms of the lead time, and obviously people are feeling a little bit more nervous with the risk of potential restrictions being imposed. Just in, I guess, the overall scale of demand, is there anything that you can point to in the data at the moment that certainly I see in my own business that we now do have more of our kind of international meetings, international events coming back on stream this year. Do you see that uplift in overall aggregate activity?
Yeah, and London was one of the top 5 search destinations for European travelers. So that in itself is a good indication that there is demand going to be looked at for in London. And then on the outbound side, UK travelers are ranked the highest among the European countries for international travel. Leisure, like we mentioned, is still driving much of that demand into the London market, with some group business coming back. We are watching some progress with some group activity in the first 4 months of the year, whilst there were some cancellations during Omicron. We're seeing, whilst cancellations were made, it was not a total cancellation, but a changing of dates, where the dates shifted out, probably more into the time when maybe leisure was going to be stronger, and we're seeing that those group bookings moving out to take over some of that demand that is coming by at the time of leisure activity. So yes.
Great, thank you. David, just coming back to you on one of these points that Jan has raised there about booking behaviour, and we talked a little bit about this when we spoke the other week. What are your observations on how that's changed in terms of lead times, and a little bit how you've had to adapt to that as a hotel operator?
Well, I think it's fair to say that certainly, you know, the very, very short lead times are still prevalent, but it's building now with longer, which wasn't there really right through the autumn last year. Like Peter actually said, in December, which I think I referred to, we had a situation where we were literally cancelling and rebooking almost equivalent amounts right through December from the end of November, which was a pretty extraordinary kind of moment, but as it ended up kind of as we'd sort of predicted. But at the moment, we are absolutely seeing people, you know, with the Silver Jubilee events and various other things like that. There's clearly, if you like, some event-related leisure, longer stay, clearly utilising, I mean, our products as well, suited to a longer stay, but utilising or expecting to be coming into London internationally. So that kind of planning is happening. We've got some very good bilateral relations with guests who had booked previously and cancelled, who were kind of serial returnees, as it were. And they're now sort of coming back out of 2025, funnily enough, which is where we put them in the PMS. We're bringing them back into bookings now. But it's, I mean, I do think it's a picture of, you know, a sense where, you know, rightly or wrongly, that people are getting back to travel. I think also the what we have seen through this last period is a flight to quality, I think, as well. People are making a really informed judgment. They're looking at quite a number of things. They're clearly contemplating, and that's possibly because of the greater influence of the leisure stay and the need for the stay to be meaningful for, you know, more than one person.
Yeah, no, and you raised an interesting point there around that that phrase, a flight to quality. And I want to come to you, Russell, on this this question that links to that. Given all the disruption, given everything that's happened and how hard hit London has been by the pandemic, what's your view as to how well or how London hotel values have held up relative to pre-pandemic levels? And has there, as you often see where there's a downturn, has there been a flight to quality? You know, have you seen, you know, the real kind of premium destinations are holding up and secondary, tertiary locations perhaps harder hit? What's your perspective on valuations at the moment?
Let me try and paint a slightly broader picture, because valuations per se are really only proven when there's a transaction. And there's been a dearth of transactions that means that valuations have been continuing, no question. People still need to have had their hotels valued, whether it's for the bank or for other purposes. But until there are more transactions, it's a little bit difficult to separate the theoretical from the actual. But nevertheless, values have held up, largely because the long-term prospects are still there. Now, I know there have been some short-term issues. We can't ignore those. But in terms of where people expect the longer term to be, London, like many other places, is expected to return and restore. And maybe the type of business that hotels are having to deal with is needing to change. And there has been already, and I think we're all very focused on occupancy, but it's important to recognize the rate aspect of the equation as well, that rates have held up largely because the business mix has changed, so that some of the cheaper business that hotels might traditionally have accommodated aren't necessarily therefore part of the business mix. But in terms of the overall, values generally are holding up, number one. Secondly, the flight to quality, the more upscale hotels, they have held up particularly well in many cases. And Michael, I'm sure, is a case in point in telling us about, how the event side has really held up well. And it's all a question of whether there is continuing interest. And you put anything like an upscale or a luxury hotel on the market in a place like London, and you'll see the queue of buyers, not just around the block, but across, the ocean. There will be, and there is, huge demand still to own hotels in the London market.
Thanks, Russell. Always good to hear. Just changing tack a little bit now. I think one of the things that's on a lot of people's minds is maybe how the future market might develop and what changes to business models might be necessary to respond to that. At this point, it'd be great to bring you in, Carrie, to just hear a little bit more about the project at Chateau Denmark. People may or may not be aware of it. It'd be great just to get a bit of background on it, and then as you kind of tell that story, whether as through that development and planning you've had to change to react to COVID, or actually you think that the models will stand up to the new dynamics that we're facing.
Yes, hi, thank you, Graham. Interestingly, I mean, when I took the project on now, probably about, over 3.5 years ago, it was the challenge and exciting part about it was the fact that it was a very unique and a different situation, in that it was a development, an area, 16 buildings over a district, over 2 to 3 streets around Denmark Street, predominantly. And I think for us, it was very much wanting to have a look at that, and that was pre-pandemic, have a look at that and how we could possibly change slightly the face of hospitality and maybe change some of the traditional thoughts and ideas about how our guests should sort of live and stay in London. So for us, it was very much chose that route thinking. I mean, I think a lot of operators would have walked away straight away, because it was like, oh my gosh, how could they possibly deal without a lobby or a shared communal space, whether it be for breakfast or for anything else? And we swapped it and took it the other way and thought, actually, you know what, let's make this work. And then of course, pandemic did hit, and of course we have been delayed due to that. But we then reinforced, I think, in a way, our sort of belief in what we were setting out to do, in that we were looking at changing the sort of hierarchy of departments and traditions of, front of house and food and beverage and back of house, to sort of try and also incorporate service into streamline it and to multi-skill and multi-talent the team. So in other words, you can check, our guys and girls can check in everybody. They can check in, they can make a cocktail, they can unpack your bag, they can do the concierge service, they can do everything. So our thought process was to do that. And then with the pandemic, we felt suddenly that people will feel possibly not kind of wanting so much of the contact with so many different people along their journey when they arrive and throughout their stay. So once again, it showed us that if by giving you, the guest, 2 butlers during your stay, whether it's 4 nights or a year, because we are apartments and session rooms, the idea would be that you had a one-stop contact, that you had somebody that could do everything for you. And then we developed the idea, even that on the onset actually, to sort of have these wonderful bars within our bathroom. So you had a home from home in your space. So in actual fact, you could feel the ability to sort of almost let your inhibitions leave and be whatever you wanted to be within the space that we created for you, or we are creating for you. So that for us was a great way of taking what we've done in our traditional background into something completely different and very different, and almost sort of looking at how you would see a resort, which is very much in a space that a resort, we always refer to a resort as somewhere where there is nothing else around you, right? So you've got to have a one-stop shop. But we're bringing that to an urban situation here, which is quite interesting, different and unique. And it's helped the most certainly by the fact that we are part of the district. You know, we've got a venue that's got a 2,000-seater venue plus 2 smaller 500-seater venues there. We've got 14 plus retail situations around us. We've got 6-7 restaurants that we're having. We've got partners all the way around, and we're developing. And of course, Outernet, which is, you know, where we are, the main focus here, which is the screens, which will be quite something. They are spectacular, I have to say. But it's built a community, and this community, we are all working together as one big family, so to say. You know, we're not Disneyfying anything. There's nothing about that at all. We are very independent. We are making sure that we're not, you know, that's not what we're going to create. We are creating an ethos and a community within a space, and bringing in, like I say, retailers and so many different tenants to the party. We're working on everything together as a team, from deliveries, transportation, to the suppliers we use, to all of that. So we are hoping to achieve, well, we all work off each other. You know, the whole point is that we feed off each other, we help each other, and with the diversity and the kind of interaction with our guests across all of these areas is something that is unique too, because our guests will interact with the venue, with the restaurants, and vice versa. We are all going to be part of a sort of that sounds great, a bubble of, you know, of creativity and business.
And does I think it's a fascinating project, and you know, hugely ambitious to have somebody take that fully curated view of an area and, you know, develop all this in a kind of holistic fashion. Yeah, you've worked in, if you like, kind of the traditional hotel world as well. You know, as you think about how, you know, maybe the pandemic has changed behaviors, how, you know, people travel and how people do business. You know, you are, if you like, intimately connected with those businesses with which you're kind of co-located, which gives you, you know, to a degree, some inbuilt demand, right? They're going to drive flow and an activity, you know, in your location. Do you think, as we look into the future, that might become a more prevalent model where there's more of that co-location with reasons to drive demand to an area?
Absolutely, I really do believe in that, because I think what we're doing here, and it was touched on earlier, is that, you know, we are offering experiences, and I think what this does is it gives us the ability to create those experiences to all of our guests, but not us try and be the master of all of them. You know, we are not the experts in a venue operator. We're not the experts necessarily in a high-end restaurant that we're having as a partner with us, which is one of the sort of the tenants on the site as well. So let them do what they do best, and let them be the experts at it, and we are what we do best. So I think there's a very strong demand and message that this could be something that could be rolled out most definitely in an urban situation, rather than just sort of where we would always see it primarily before, you know. So yes, you know, rather than a sort of a, yeah, you know, I believe that totally that this is something that is very interesting, very different, and will be something in the future, because our guests are not wanting, we've noticed over the years that the experience, especially the younger generation, is something that is very much forefront of their travel. You know, that's what they want to do. They want to not just take in, I mean, the days are gone where you lie on the beach with a pina colada, right? You know, you want to do something a bit more interesting. Well, maybe we all do, but we want to do that at the same time. We want to go and do something else as well. And I think for London, it's important that we incorporate all that. And yes, we've got the wonderful theatre land around. We're so lucky in our situation, but by incorporating more, bringing more to the table, and we are all partnership, because ultimately all the hotels traditionally in London have a restaurant within their own building for the most part, whether it's managed by themselves or not. But then everything else is outside. You know, yes, we can connect you to anything and everything, but it's not part of the community. You're not in partnership with the people next door like we will be. You know, we will have this wonderful situation where we are all working together and as one big team, and it's as simple as that, really.
Yeah, thanks, Carrie. And although the thought of sitting on a beach drinking a pina colada does seem rather appealing, sat here in London on a cold January morning.
Indeed.
Just taking that theme of you know, the vibrancy of an area and how that drives traffic. Michael, if I could come to you on this next question, because one of the questions or concerns that often gets raised about the London market is really just around that level of new supply that's coming on stream, you know, the continued expansion of the bed supply in London. And you know, you have some notable new entrants coming on stream near you, whether it's Raffles or Admiralty Arch. And just come to you, because I think you have it's like a slightly different take, a more positive view as to the impact of new supply and what it does to an area.
I think firstly, I mean, London is a great city. I think the demand for London will always come back to where it was and keep on improving. I mean, you've got all the attractions, the theatre, the shopping, the history. So that demand will just keep on continuing. And I think all the new hotel openings, especially in the luxury space, can absorb that. Then in terms of our direct sort of openings next door to us, in terms of Raffles and up the road at Admiralty Arch, it's a great thing. I mean, one, competition is good. It's good for the customer. It's good for innovation. And two, for us as a property owner, it's even better. We were pioneers in this area. So, we took the decision to invest into Whitehall. It's, in our view, it's the centre of London. So, everything is measured from there. You've got the city 10 minutes up the road. You can get into Mayfair. You have all the theatres around you. So in our view, it's actually creating a destination around us, which will again increase demand, increase offering in the area, and it will just help sort of increase the outlook for this area and investment in the future years.
Yeah, no, absolutely. And Peter, coming to you, I guess maybe experienced hotelier and a lot of experience in the London market. What's your perspectives on the ability of London as a city to absorb this new supply that's coming on stream?
I mean, in terms of absorption, I mean, obviously we've had
one new opening within the last year, fairly substantial hotel, and perhaps not a traditional area for that sort of quality of hotel. But we clearly believe in the London market. The aspect of absorption, I mean, new supply, release of hotels that are coming in off of exclusive hires, whether that's a quarantine or Afghan housing, removal of occupancy caps, etc. All of that's got a potential negative effect. I think one of the things we haven't touched on in terms of the absorption is that all of those things also put a pressure on the already stressed labour market. And that's something that definitively does need to be addressed, and there's no quick answer to it. So I think it's different from a normal supply and demand question. I mean, in a pre-COVID environment, I don't think there's any question that the supply could be absorbed. But the question is, how do we get back to that environment? And in many ways, that requires a change back relative to the international travel regulations and almost a re-education of corporate and international leisure buyers, and a sort of retreat from this imposed fear and uncertainty. And the last couple of years have shown what controlled messaging and censorship on a global basis can achieve in terms of changing behaviours. And I think that possibly is one of the biggest threats we have in terms of how we get back to what we perceive as a traditional market. But the opportunities there, I think various of the comments have come up with ones like the capability of the Londoner and the ballrooms, etc. there, the interest and the holding of big events and quality when people are allowed to do it and feel free to do it has been very strong. In parallel to one of the comments earlier on, when our restaurant brands around the country, well, London and up in Manchester, when they've been allowed to operate unrestricted, the demand levels have been quite extraordinary. There is a desire there for people to do things when they feel free to make the decisions to do it. The problem is getting people back to feeling that they can make those decisions.
Thanks, Peter. And you raised an important point there around the impact of restrictions, almost just on the psychology of the customer. Jan, could I come back to you on this? I wonder whether there's any kind of insight you can give us as to data coming out of the American market, maybe in comparative performance of some US cities which have had slightly different takes on response to COVID, Miami compared to New York, for example, that might be informative as to how that London recovery might play out as we look to fully reopen and remove all restrictions.
Sure. So that's a good segue to talk about, I guess, the US market. Talking about Miami, the occupancies weathered well through the pandemic, relatively well. The city saw significant impacts in the beginning in March 2020. Like most of the US cities, the lifting of the restrictions led to steady occupancy improvements. And right now, closely mirroring the pre-pandemic market performance since February 2021. Okay, so in some weeks in Miami, it outperformed, the 2019 levels. That was a success story. Talking about Miami, in New York, the occupancies are currently in the mid 60s, while the usual rate is in the 80s to low 90s, because there are still some precautionary measures being in New York. Chicago is also improving. Precautionary measures are in place. Occupancies are 50 to 60%, while normal rates are in the 80s. But then New York and Chicago, face different challenges compared to Miami, because they're, especially in these months, not being able to use the outdoor facilities, etc. The warmer destinations in the US, with the restrictions being opened up, they are getting back, strong demand in the top markets.
Great, thank you. So it sounds as though actually those restrictions being removed and is enabling that kind of demand to bounce back and get levels already to be in certain circumstances ahead of 19 levels, which is really quite impressive.
Yep.
And just taking this, one of the questions that has been raised here, and I think is very important looking forward into 2022, is around the presence of inflation in the cost lines, also just kind of access to staff, and we talked about occupancy, but the ability for rate increases to keep pace with and stay ahead of inflation. I just want to take a couple of lines on this. First to you, Russell. Hotels as an investment class have historically been seen as almost a hedge against inflation. Given the inflationary environment we're staring into at the moment, do you think that still holds true, or is it different this time?
I don't honestly think it's different. It's just that most people on this call aren't used to high inflation. We've sort of forgotten what it's like to live in what some of us used to call a normal inflationary environment. And the reason that I think you made your comment is that in the good old days, you would borrow at a certain rate. And because of inflation being what it was, you were effectively paying back your loans in inflated currency. And it sort of felt okay. And you were able to keep pace with your price increases and your cost increases, and everything moved in step. I think simply because we're just not used to cost increases and therefore price increases being perhaps as dramatic as people are envisaging that they have to be. I think it's very important to take a granular approach and not look at the sort of total inflationary effect, but look at the impact of the individual elements that seem to cause it. So in terms of the operating costs, there are some particular issues that hoteliers are experiencing at the moment, not least in terms of utility costs and not least in terms of staff costs. And there are ways of mitigating certainly the latter in terms of looking at the way we work, looking at how we staff. Carrie's example of having multi-purpose activities carried out by a single individual certainly helps that. And I think we have to get used to the fact that not every service that we used to offer is going to be offered, whether it's turn down services in the evening or things like that, that help us to contain cost increases. But also, as I said earlier, the pattern of business, the structure of a hotel's occupancy and so forth is changing. And therefore, what we're seeing is perhaps improved average room rates, simply caused by some of the business not actually coming anymore, or more of certain types of business being experienced. And the one thing that I will just end with, in the leisure markets in particular, a lot of operators of hotels to leisure guests have noticed that there is much less price resistance, and they have been able to reap the benefits of that in the past year or so.
Thanks, Russell. Come to you, David, if I could, just for the operator perspective on this. What are you finding in terms of your ability to have your rate keep pace with the inflationary impact on your cost line, so that your profitability can be protected and grown in this environment?
Well, I think like everybody, we're still in recovery mode. So I think that we've also got VAT changes coming up and various other things to bear in mind that start to play out from April. I think the main thing that we're effectively a relatively lean operating model, and we're relatively high fixed costs. So obviously recovery in rate and occupancy for us is extremely beneficial as it's been building back up and as it comes through. But nevertheless, it has been quite a difficult time. I think that what we've really focused on, sort of taking, I think partly to Russell's point, picking up on the granularity of what can we actually influence. Clearly, we can't influence geopolitical events. And I remember the 70s, and I remember it was oil crisis. So whatever these things, they do cause huge spikes. And whether or not you have an endemic or a sustained injury from these things is very much perhaps how you respond, or the state of the economy and the macros. So we've looked to heavily support our teams in terms of remuneration. We've looked to also really build in the last couple of years on, I think, the increased awareness and thoughtfulness from guests about the reputation of the places that they're going to stay. So we've really concentrated on our brand as we build the resident up. I think Carrie used the phrase, home from home. That's very much part of how we see things. And by building up that close proximity, bilateral relationship with guests and engaging with teams, we're seeing, I think, significant mitigation, if you like, of damage. But it is still a recovery profile. I think perhaps over the last couple of years, some people who've been spokespeople for the industry haven't really fully appreciated what happens when you shut down a bar or a restaurant, for example. They're very difficult things to get back up and running, far less the entire economy. So it's still a recovery phase. I think we're quite well placed. We have average length of stay is much longer, even with domestic audience. But I think it's incredibly important to focus on what you can influence, and that has to be the guest, the teams, and the experience, and really hope that the adjacencies, whether they're bars, restaurants, or arts and culture, in our micro locations, that these guys can get up and recover as well. And I'm firmly an optimist. I believe that's possible. But I don't envy the challenges of dealing with a very heavy cost base, full facilities entity trying to recover in this scenario. That is very complicated.
I mean, on that note, I mean, Michael, in terms of a full facility operation, there aren't kind of many as large as the Corinthia, and as a a very financially minded hotelier, I'm sure you've given this a lot of thought. What are your perspectives on that ability for kind of rate and top line to keep pace with unmitigatable cost inflation?
So if we look at 2021 as an example, on business mix, we grew average rates by 40%. The real increase, if we strip back the business mix, was around 20%. But that was required, for the costs on payroll and on utilities in particular. I think the only way to start to manage this payroll cost, because obviously payroll doesn't come down once you put it up, we've got to become more intelligent on rostering and having flexible working and maybe doing shifts for 2 hours or 4 hours, and you have to widen your labour pool. On utilities, I mean, in some countries outside of London, we've seen utilities shoot up to around 10 to 15% of revenue. In London, thankfully, we were hedged for 21 and 22, so we've been quite protected, but we're doing a lot of work at the minute to look at the building, see how we can optimize utility consumption. Because in my view, in utilities, they're just going to keep on increasing in cost, especially with the move to green energy sources. It's something that we really have to start considering now and finding ways to reduce consumption.
Thank you. Just I'm conscious of time. We're getting up towards the end of the panel. I'd just like to come round to everybody just with one last question, if I may, and really get people's views on Revpar for London, and in which year we think Revpar for London will get back to the magic levels of 2019. Just be interested to get everybody's perspectives on that. Maybe I'd start out with you, Carrie, on the right hand side of my thumbnails on my screen. Where do you think that kind of recovery at the Revpar level will finally get back to where we were?
I have to say, well, obviously, we're in a situation where we're just about to, launch, and we've been working. I think we're on version 43 now of our operating budget for the next 3 years. So that's been quite a challenge in itself, and it's obviously yo-yoed as we've gone through what we've gone through. We see that we will, from our perspective, and I do think from seeing London, I bumped into many colleagues recently. On the streets, basically, of Soho, and they're all saying, ex-colleagues really, and they're all saying that actually suddenly the light switch got turned on, 2 weekends ago in London, and they suddenly saw it all coming back, which is great news, and we're thrilled because, for us, it's I think someone was saying earlier that sort of opening around us and competition, and we always engage with that, and very happy for that because we work alongside each other. But I think from where we sit next year, I do believe, and I already feel that we are making the recovery, has been said before, and I do believe we're going to go into the long stay. Average length of stay is most definitely going to increase, which actually helps us in a certain degree from a London perspective, because actually there's more of London to be done, to be seen within that length of stay. You're not just in and out for 2 nights, which was 2.5 nights previously, where you might have 1 night out and 1 night with the business, whatever the case may be. But now we're going to see more of that, which will help all of our local areas and the local businesses, get back to where they should be. So from my perspective, early next year, definitely.
Great, thank you. Russell?
The problem with averages is that they're made up of all sorts of different people. And the really good hotels, I think, will be back to where they were Revpar-wise in 2023. And they're the leaders. and I think everybody else is then going to follow. I would say if we're looking at a normal distribution, I would say that the majority of people should be back to where they were in 2024, but there will be some stragglers. And my message to anybody who isn't at the leading edge is look at what other people are doing, learn from what they were doing, and change your act accordingly in order to be one of the ones that are above average, rather than you that are just on average or, God forbid, below average. Because I think, as Carrie is saying, the opportunity is there, and the fact that you keep your eyes open, you notice when things happen and you leap to take advantage of those situations and be nimble, be flexible. And I think it can be done, and I'm hopeful that all the good people that have joined us today, they're all representing hoteliers and hotels that will be back to where we were in 2019 more quickly than anybody else. So good luck.
Thanks, Russell. Michael?
I share Russell and Carrie's view that the 2023, we should be back to the 2019 levels. I do think later this year, on a month-by-month basis, we could start to see hitting back to 2019 levels already, you know, as we enter into Q3 and Q4.
Right. Thank you. Jan, what's your perspective on this?
So, you know, we are a very resilient industry. There is huge amount of pent-up demand, and, you know, based on that, as in, there's a lot of obviously change in customer behavior, etc. I think that, you know, the hoteliers probably need to get more digitally savvy around data and how they use data. You know, constantly looking at forecast with future data and then what's happening. And you know, like Russell said, if the hotels who use this data correctly and are ahead of the game, they will look at Revpar coming back, you know, closer to the end of 2023 to the 2019 level.
Great, thanks, Jan. David?
Probably getting a bit of a consensus group thing going on. Oh dear. But I think fundamentally it's the great benefit of visibility to the world, the global market, is that, you know, we all have in our own way effectively a distribution system that connects with every device in the world, even if it goes through various different routes. So I think that reputation being held high, whether it's the city for all of its diversity and all the things that happen that we've all talked about, or indeed the hospitality offers within it, or the business opportunities within the city, it's a huge draw. And we're incredibly lucky, as a person who is still part of the UK, as it were. The fact is, we're incredibly lucky to have one of the great cities that we live and work in, and people want to come here. And I think that you know, that should bode well for recovery. I mean, when I look at Revpar comparisons, I'm a bit confused, because in January, our Soho and Covent Garden hotels were doing 300% of Revpar of London West End and CompSet. So I think there are still some challenges beneath the waters. Definitely, there are some things that are more of a problem than perhaps immediately hit the eye. But I think there's every cause for optimism. After all, after Omicron comes maybe Pi, which is the irresolvable number. So there'll be no need for any more variants to be described, because you can call them all Pi. Maybe there'll be Pi, or I don't know, cake available at the end of it.
I didn't think that was where we would end up with one of our closing comments, but Peter, I'm not quite sure how you follow that, but I'll just come to you finally for your view on that. Not on Pi.
No, good. No, I mean, I think generally in agreement. I mean, the issue from my point, it comes back to, we can pontificate in terms of when it comes back, but ultimately it's
as much on global politics in terms of how it can come back as it is on normal market movement. I think that you're saying Revpar, so I think on a Revpar basis, then we should see it next year. But I think when you're looking at the sort of you know, total revenue of the operations, and certainly for a number of our properties, we would be far more concerned on that side. I think you're on a flat basis, you're probably looking at 24 to get back to that. And if you're looking at it on a true inflated basis in terms of 2019 inflated, then you're probably looking at 25 or after, if we've got a slow return on various of these other constituent facts. So in terms of the meetings and events, the international travel or whatever. And, you know, we talk about reopening of markets. I think one thing that wasn't mentioned, minor point, but it's to get transatlantic business back, right? The CDC has still got the UK on level 4. Until we break through some of these things and remove some of these ridiculous constraints, we're not going to get an opening up of the market.
Great, thanks, Peter. So I think we're right on time. So thank you very much to all the panelists. That's been fantastic. Really appreciate your time and your perspectives on all of this. And I'll hand back to Karen.
Thank you very much, Graham. So just a few personal impressions from me to finish with today. Very briefly, some of the messages that I've taken from today is that, going to David's point, not the cake point. I think we've all had enough about cake in recent weeks, but we are very much still in the recovery phase. And that's something I think that everybody on our panel and all of our speakers today are very conscious of. It was also David who said that operators, owners need to concentrate on the brand in particular at the moment and make sure that you're offering something that today's customer really wants, with a particular eye to your profile for responsibility and sustainability. I think those are going to be becoming increasingly important themes. I love Carrie's point about creating a home from home, and that really also ties into the overall importance of the overall experience. People are really looking for different experiences now. I also enjoyed Michael's comments about the Corinthia being a pioneer in the Whitehall area, and on a personal note, that I'd certainly recommend that you watch the fantastic TV programme, those of you who haven't seen it recently, that focused on the Corinthia, which certainly for me showcases the enduring quality of the luxury London hotel market. Peter made the point about stress staffing, something that's going to be with us for a long time, I think. And really, just to finish on Peter's other point that I thought was a very good one, which is that these restrictions that are still with us are really the core of the issue. And once those are lifted and people begin to feel free again, then demand will be back. And I think we should carry that positive thought with us. So thank you to Muniya and to Chris and to all of our panelists today for what I think was a great session, lots of food for thought. And thank you to all of those who joined us for supporting us today. And please look out for news of our next webinar, which will be happening in the next couple of months. Thank you very much, everyone. Have a good day.